Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. We've got another action-packed town hall for you. Lots of information to convey. So we're going to have some broad opening comments, and then we're going to get into a legislative and new administration update. We're then going to follow that with talking about the latest from the SBA and the lender processing of this next phase of PPP. And then we'll have some updates from Lisa Simpson broadly across many of the business relief programs that are underway. So you can earn CPE by clicking on 75% of the attendance pop-ups. And you also have this toolbar at the bottom where you can download the materials, download today's presentation, and you can ask questions, but do reference some of the materials before you start asking those questions. If your browser freezes, please just refresh it. So let's continue with introducing today's presenters. So we've got Ed Carl, who leads the tax area. You all know him well. He's been on many town halls and he's very, very active. We've got Mark Peterson, who leads the advocacy area in Washington, D.C., and you all know Lisa Simpson. So we're going to kick this off just talking about what's going on with the broader ecosystem. I can tell you there's a lot of stress. There's a lot of stress, I know, with the firms as well as with these other providers. The lenders are working very diligently to execute the program that the SBA has put in place. There are a number of new elements that we're all still trying to get our arms around. We'll be talking a little bit about that. And we've been very active with the new administration. They're just beginning to form, and the appointees are being made in the Treasury and SBA areas, as well as other governmental agencies. And Mark Peterson will be talking a little bit about that. But what I want to do now is just talk a little bit about the trusted advisor role and what's been going on for the past year. Because right now, we're in a time like no other, and there's a lot of stresses. And I've been having discussions with firms every day, and there's frustrations. There's frustrations around what's going on with the lending community. There's frustrations at times on what's going on with our CPA loan portal. And when you're in moments like this, I mean, nobody knew that the SBA was going to put in place these 50 different validation checks. Actually, right before this program was rolled out, we were thinking it was going to be very similar to the original PPP program. But for a number of reasons, the governmental officials decided to put in more validation checks. And the reason for that is they want to protect taxpayer dollars. With that, we've all had to get our arms around how to support this for the business clients. And when I look at this slide here, at times being the trusted advisor is to be dealing with these unknowns. There's lots of unknowns. There's many questions that are going unanswered, and everyone's working hard. The lenders are working hard. Even the government officials are working hard. They've got positive intent around what they're trying to do. Things aren't working as well as they need to work, and also there needs to be potentially some modification of expectations related to this phase of PPP. So this slide here is something we've been talking about for the past year, and right now we're just in this kind of pressure moment related to playing that trusted advisor role for the clients. So let me now bring Mark Peterson in and talk about, there's always a lot of pressure there in Washington, D.C. So there's nothing new to them. They're always under pressure to kind of improve what's going on with the country. So Mark, why don't you, give us, lay of the land and what's going on right now in the Capitol with the Biden administration. So welcome.
Right. So I think there's really two priorities that are going on right now. And the first is the administration to get set up, to get confirmations through the Senate, to start to get the agencies and the administration all put together. The time frame we're in right now is very normal. But I think what you highlighted there with the stress, Eric, is a symptom of that. This is a program that is over a period of new administrations. And so it wouldn't matter which administration it is. It takes time to get set up. And there will also be slightly different perspectives on, how best to implement a program. And I think that is one of the things that's leading to some of the challenges that we've seen. Again, with any administration, you have this period of time where, the last team left and the new team's coming in. And so they're working through that.
Mark, just a quick question on that, because you got a new team, and new teams always try to do things in new ways. And at times there's unintended consequences. So what happened? There's the Inspector General report from 2020. There were some fictitious applications. So what you have occurring here is saying we don't want fraudulent applications, and then you put in place a process and validation checks that have just inundated, the lenders as well as the SBA in trying to process hundreds of thousands of applications. And then some of the regionally, people were saying this would even happen in a week. It's not even happening in a month now for some of these applications. And so massive unintended consequences based on people they were trying to do something, with positive intent. They just didn't have everything worked out.
A huge tension between getting out this recovery money to small business, which is what all those members of Congress voted for, as quickly as possible. And they went home and said they were going to do that, versus, and you mentioned this, the potential for fraud around public money. I do think that as the leadership comes on board at the agencies, that will help this. What happens is, you kind of default to what you know. So when you think about the, SBA loan programs that have gone to small business over the years, they have not necessarily been streamlined, Eric. And so you fall back to what you know because it's safe. And I think there's a mixture of things that are going on there, best intent, but it has created some issues and obviously stressed in the system, to your point. And I think the next thing that is perfect to talk about with transition, our next slide, Lisa, is, two big ones. We've got Janet Yellen, who's been confirmed. She's actually in her office over at Treasury. As far as stimulus goes, she's talked about going big. So she's very much about getting money into the system and getting support. Philosophically, we may see something a little different out of her. It may not be loans. It may be more of a focus on grants. That's a little of scuttlebutt, but we'll see how that plays out. There's a big difference between, what you say and what you can get through the legislative process and then the authority that you have at your agency. And then Guzman going over to SBA. She's going to get out of the Senate Small Business Committee next week, and then she'll be confirmed on the Senate floor probably the week after. And then she'll be at the SBA. Her team will be getting into place. I think, again, that will bring some help to answering these questions. I wish the timeline was sooner because of the stress that everybody's under. But getting her there quickly, I think, is going to make a big difference. And then we will also see nuanced changes. I mean, they're implementing the law that passed, but the administration in their guidance that they put out and in how they implement still can have nuanced change. So that's going to be something that we're going to have to watch as well.
Yeah, and the next slide here, Mark, talks about the stimulus bill. And if you think about it, we had the second largest business relief stimulus act in the history of the United States in December. And now we're going to add 1.9 trillion. You add those two, they're equal to, it's basically a tie to the CARES Act. And it's hard. And we're going to be still implementing the $900 billion bill when this bill looks like it goes into law by, sometime in late February, early March.
Yeah, no, absolutely. Well, first on the timing. So it appears that the House, this is what they're working against. There's some of the provisions are going to be running out in the middle of March from the last bill, unemployment insurance and things like that. So they want to get this done before, middle of March 14th, 15th. Okay. So it's got to get out of the House. It's online to do that. And leadership wants it out by, February 26th. That could slip. We'll see. There's a strong potential that when that moves to the Senate isn't going to like all the provisions, particularly some things around increasing the minimum wage. It's just where the votes are. This is being done under a process where all they need is 51 votes. So it can be done just through the two Democrat majorities. So if that happens, that means that it may have to go back to the House if it's amended for the House to agree to what the Senate amendments, which adds some complexity to the timing. Although again, the goal is middle of March. And then within it, the 1.9 trillion, they've got another 50 billion for small business. And I'll just take you through that, Eric. It's another 7.25 for PPP funding. Okay, so they're trying to get through the PPP money right now, right? And then they're going to be adding more to it. So will there changes be made to the program, later? It's possible. But right now, the way this is being articulated is it would be adding money to the current system that we are struggling with. Another 15 build of the EIDL program, 25 billion to a new SBA program related to restaurants, 1.25 for the closed venues. And then, this is important, 25 million to the SBA's Office of Inspector General for oversight. So, that pressure that the agencies feel about combating fraud and some of these issues that have created a slowdown is also because that oversight is coming. It's absolutely 100% coming. Next slide. So you mentioned the validation checks, and you're going to get into that a little bit later as well. We did work on getting a letter to SBA, which we also communicated to Capitol Hill to really outline the problems that we're seeing that are putting a lot of these applications into the parking lot or even stalling out before the applications are submitted. So we raised that awareness, not only in a letter, but as you've mentioned, we've talked to Treasury about it. We've talked to SBA about it. But we're also talking to Capitol Hill. Just this week, we've probably got a couple dozen members of Congress, members of the House and Senate Small Business Committee. We always go to the CPAs in Congress to talk about these issues because they understand them. And we also had a program that rolled out last year where we were working with members of Congress in their congressional districts. They would put together town halls with small business. They'd bring in an SBA regional rep, and then we would find a CPA or two to help answer questions for those small businesses. Again, the politicians that voted for these programs want them implemented, and they want them implemented quickly. And so there's a lot of interest in how this is rolling out, and there's going to be a lot of interest in hearing from us and from the firms about some of the issues that we've seen in the process. And I mentioned, PPP3, which gets hard to believe we're talking about that with some of the issues with this last round, but yet to be seen how that's going to all play out.
And Mark, I'll be talking a little bit more about the validation checks, but I was just on a call with lenders, and it's widespread. You've got lenders that are very, very experienced in the 7A program that they actually are telling some of their clients to call the congressional officials because they just don't know what to do to get the application process. With that said, there's absolutely applications that are making it through the system, through the parking lot.
Yeah.
But there's some that can't get in the parking lot, or they're in the parking lot and you can't figure out how to get them out. So it's widespread. So we'll talk a little bit more about the details of that.
And it's snowballing, Eric. It's snowballing. Yeah. We're hearing about it from the firms, or we're hearing about it from clients. And because some are getting through and some aren't, there's a lot of questions about, that creates more pressure. Right. And so what's going to happen, my prediction is there's going to be increased political pressure on the program and trying to figure out how to get this done. And I mentioned Guzman going to the SBA. She's going to get questions in the next 2 weeks over the process there. So, this is, again, as this snowballs, as businesses is struggling here, it's going to elevate to, the policymakers. Absolutely. Next slide.
Well, I'm going to let we'll get Ed up here. But the thing is, we just talked, there's just this, let's get into tax, Ed, and where everything's going smoothly. Right?
Well, I believe we're in tax season again. We're getting through last tax season those challenges and the delays we got through, and to be honest, a lot of the service issues that we've always had. Next slide. We always start my conversations about service levels with the fact that we have a really good relationship with the IRS. We have a very close relationship with them. It's important that we can work together to resolve issues in a voluntary tax-paying system. That being said, service levels aren't where they need to be. We're part of the channel of communication into the IRS that works on that and tries to help them understand what we're hearing, and they want to hear about that. And they're hearing very loudly. And as Ed is going to describe, we know there are challenges there.
Yeah. So, Mark, you mentioned that it's hard to believe we're back in filing season again. I think from most of the members I speak to, it never ended from last year. So it's been one continuous filing season. Interesting on that Politico slide just before this one, and talked about the phone issues. We've heard that in January, IRS received 7.5 million more phone calls than they did the previous January. That's a 300% increase. And when you talk about service levels, so we know IRS has said that all of their operation centers are open and functioning, but that doesn't mean that they're fully staffed and operational at the same time, because with local requirements, they have social distancing requirements, et cetera. So they're suffering from that perspective. We're speaking to members every day, and we do speak to IRS every day and convey a lot of the issues that we're hearing about. One of the biggest issues we're hearing right now are the CP notices. So a lot of our members know about the CP 2000, which is the information mismatch. You have to have a return in the system to check information returns against. Well, now our members are getting notices from IRS that their clients don't have a return to match the information returns against. You got to have a W-2, and there's no 1040 filed. Yet our members are saying, of course we filed the 1040, we e-filed it, we have a receipt, but their IRS is missing it. And we're getting a slew of those notices, many others as well. So it's a problem. And we had a long conversation with IRS even this morning about it. So that work is ongoing. Our advocacy in that area and trying to get IRS to slow down on the compliance initiatives is ongoing.
Absolutely. And that takes us right into 2021 and the upcoming due date. And big impact on that, Ed, is going to be what are the service levels, and is the IRS going to be in shape in order to have a April 15th deadline. And this is always a sensitive issue. It splits the membership. It has, it did last filing season, and it will again. And one big part of that is the stimulus checks from the package that we believe that $1.9 trillion package is going to pass mid-March. I think that they've got a process to get it done. They've got the votes to get it done. And so if that happens, these checks go out. And we've heard even from the commissioner that if those checks go out and they're pushed through the IRS, it could have an impact on filing season.
Yeah, absolutely. And when you talk about the service levels, it's one of the data points that we have to consider in making the right decisions on behalf of a very diverse membership. So as you alluded to, our members are on both sides of the equation. As I said before, we speak to them every day. Some want a change, some don't want a change at all. The IRS official position about April 15th, and again, we confirmed that this morning when we spoke with them, is that they've said there are no internal discussions about changing away from April 15th. But what you alluded to about the economic impact payments is that the Commissioner Rettig, has stated publicly that if there is another round of economic impact payments, they may not be able to hold to an April 15th due date. And as you just said, there's a good chance that that next round of stimulus legislation with economic impact payments, we don't know the exact amount or the income thresholds, but it's likely to happen.
It is. And so there's a lot of factors around that, literally daily calculations. But regardless of where that due date, whether it stays the same or it moves, we're talking about things to help mitigate the pressure on practitioners and taxpayers.
We're working on several things, and I'll just go back for 1 second about due dates. I just heard, frankly, Mark, since I spoke to you a little bit ago, that there's an issue with farmer returns in the farming communities. They have special estimated tax dates and 1040 due dates. And there's a concern because some of the returns or forms they need for the 1040 are not available. And those returns are due March 1st. So there's a discussion. We're part of a discussion this morning at IRS about having to fix that problem for the farming community. And IRS acknowledged that it's a problem. And so stay tuned to that if you're in a farming community and need help. In terms of relief from penalties, we're working really on two fronts. One is to mitigate the problem through reasonable cause abatement. There are certain penalties that could be abated over the phone. We don't know exactly what that threshold is on the phone. It seems to be about $1,000. Faqs is available through that process, so there should be an easier reasonable cause process on the phone. The other thing is something we just developed a position, submitted a letter to IRS and Treasury on Tuesday about reducing the percent for failure to pay at April 15th. So normally, those of you on this town hall know that you have to pay in at least 90%. We're pushing to move that down to 70%. Many CPAs who I've spoken to said that with that lower threshold, it'll be easier to guesstimate no matter when the due date is, Mark.
Right.
It'll be easier to guesstimate any balance due and less time to make the calculation and file an extension. So we're working on that as a priority right now.
Any relief. I mean, we know we've got to find relief regardless of where the due date is. Another one is expanding and making permanent e-signatures among a whole nother list. So we know the pressure that's going on with the tax preparer community. Eric?
Yeah. So, well, I mean, we've got, going on to state legislation updates, but the layering here is unbelievable. The layering, that what's going to happen over the next 60 days. And well, I'm going to get into where we stand in forgiveness. We have 2/3 of the forgiveness applications outstanding. We've got our PPP2 program. We got a new stimulus act, and then we're going to have tax filing. So it's going to be an incredible, 100 days ahead of us.
It's a lot, and I'm just going to wrap from an advocacy standpoint with a couple state issues, just because they're heating up exponentially. Related to occupational licensing, there's been a ton of pressure, a lot of advantage being taken in COVID of reducing hurdles, and so they're looking at licensing requirements, regulation around boards, including CPAs. There's like over 120 bills that have been introduced in about 35 states. The other one is tax on professional services. The state budgets have been hit, and we've seen, 10 states where we think it's a real issue for professional services. So the team that is focused on state advocacy is also very engaged there, Eric.
Well, thanks, Mark, and we'll be bringing you back during open forum. And thanks for all your team's doing. It just there's a lot going on, but it's important to be bringing these messages to the policymakers. So what I'm going to do now, we'll bring Lisa up, and we're going to go through the SBA and lender processing update. So let's move. Let's get right into this. So here's the current stats. You can see that 125 billion. Has been approved for this next phase of PPP. That's about 1.7 million loans approved. And then what you see here are the top PPP lenders. One thing to note, there's plenty of money left. There's plenty. I mean, they're talking about giving another 7.5 billion, but right now there's more than half of the 284 billion remaining. I'm going to show you a chart coming up here. that shows you how the draw is being, taken down. It looks like right now this is well funded, so they may, when they add more funding, look to make some adjustments potentially. So one thing on that last slide there, we have a lot of good information because our partner Biz2Credit has the most loans approved at 118,000, almost double the next largest provider. So going on to the next slide here, this slide shows you how it's pacing. It's a little bit different than the original PPP back in April, where it went out real fast. So and one reason why it's not going out as fast is because it's hard to get the applications through the SBA system. So the next slide here gives you more of a breakdown on who's receiving these loans. And when you look at this slide, you can see that it really is working as intended. They really wanted to make sure this next phase of PPP supported, smaller businesses. And there's a lot of smaller businesses taking advantage of Draw One. In some ways, the fintech community as well as CPA firms have helped widen the tent. So there's more Draw One applicants coming. Last July, there were no Draw One applicants coming into the system. So this is a good thing that we've got all these Draw One applicants. We have some new eligibility, but there's a lot of people taking the Draw One that actually could have taken it in 2020. And then you've got a lot of Draw Two occurring. And what you see here is a lot of that's going out to small businesses, and most of the loans are under $100,000. So let's go to the next slide here and just talk a little bit about what's happening here with these different error code phases. And there's a couple of things that you need to understand. There's really three major phases. The first phase is actually getting that application successfully received by the SBA. They have an API validation where the banks, most of the banks are using technology systems to submit these applications directly through the SBA's API, and there's validation errors occurring, so you can't get it into the system. Then when you get it into the system, that's where the SBA's underwriting process really begins, and they have over 60 flags actually. So they have a number of flags right at the start where they say, will they actually start reviewing that application? In many cases, it doesn't make it past that stage, so it has a failed validation, and there's some error codes that are given to the lender. Then the lender's got to go work on resolution of those error codes. Then if it does get through that second phase, so the first phase was electronically, it gets into the SBA. Second phase is they accept it. Then actually they start the review process, and that takes 48 hours for them to determine if they'll give it a NETRAN or not, NETRAN number. What's happening here is with these 40 different error codes, about 20% are being flagged for additional information, and they're put into this do not approve hold code status, where more information is needed from the lender, and the lender going back to the borrower. There's been a lot of confusion on how to resolve these different error codes, and in some of these error codes you cannot even resolve them. So that's why some applications unfortunately are taking weeks. A lot of frustration out there. I do think things are getting better. There's a lot of dialogue going on between the SBA and the lenders. The lenders are giving feedback to the SBA around the issues about the API, as well as what's going on with these next two phases. And the SBA is giving the lenders more authority to certify and rectify these issues. Lisa, before we go on to the next slide, I don't know if there's anything that you want to comment here.
I just wanted to mention that Eric said the SBA had delegated authority to the lenders to clear some of these codes, but the lenders are still trying to navigate how to clarify some of these codes, what documentation is going to be adequate, because they'll be submitting that application or that information at forgiveness. So they want to make sure that they're clearing the codes the way the SBA intends and that they're getting the documentation they need. So a very time-intensive manual process on the part of the lenders.
Yeah, and one thing, everybody, different from the IRS, but everybody's customer service systems are being inundated with requests to understand how to resolve these error codes, and in some cases, they don't have the answers. So and I think everyone's working at staffing up, us included, the customer service teams, so better statusing can be provided. But this is basically what's happening. So if we go to the next slide here, this just kind of summarizes, what is occurring. We've got new officials at Treasury and SBA. A lot of real-time changes to what's going on related to the implementation of this program. You've got the implementation by the lenders. They've all now really tried to pivot and understand how to work this new process. You got the firms then saying, okay, we got to help our clients, then the small business clients. The Treasury and SBA really need to set expectations that this is at times could be a month-long process. But the businesses don't know that. So then they're getting upset with the lenders, and sometimes they're getting upset with their firm. So there's a lot of anxiety here, as I said, during my opening slide. So if we go to the next slide here, we can talk a little bit about forgiveness. And this is something that there's not a lot of activity on right now, but this is what's happened to date. To date, about 1/3 of the loans from 2020 have completed the forgiveness process. So here are the numbers. There's 200,000 that are still under review. In that 200,000 are some of the larger ones, above 2 million. There's been very little movement on large loan forgiveness. I'm going to let you comment in a moment, Lisa, but if we go to the next slide here, we can see that these loans are being forgiven. 99% of the loan value has been forgiven on that 1/3 of the loans that have been submitted and approved for forgiveness by the SBA. Right now, lenders are not actively, most of them are not actively taking forgiveness applications because they've put their teams on the execution of PPP2. So they're doing that, and then there's more guidance that's needed to come out from SBA and Treasury, but I think SBA and Treasury also are focused on PPP2. So there's going to be a lot of forgiveness work coming up with 2/3 of those applications outstanding, and then we're going to move into forgiveness of PPP2. So Lisa, I know this is something that you've been talking to a lot of firms about.
Yeah, there's, we continue to get questions about those loans over 2 million. Is anything moving on them? I got a call from someone this week, he might be in the audience, and his $2.7 million loan was completely forgiven by the lender or by the SBA. He got the notification this week, but it had taken well over 90 days. He'd had to fill out the 3509, the additional information, but it has gone through the process. That is the exception at this point. They are moving very slowly on all forgiveness, and primarily at that 2 million and above, based on the conversations we're having with lenders. They'd like to get those paid off as well. One other thing on lenders slowing down on the forgiveness process, if you recall, there was a change in the forgiveness form for loans between 50 and 150,000. They can use the simplified forgiveness form. That doesn't officially get filtered into the SBA system until early March. So a lot of lenders just said, wait a minute, we're gonna just not accept any forgiveness applications, especially in that under 150 and under range, until the processes are up and running with the SBA again.
So thanks, Lisa. One thing I just want to remind everybody, I know I'm just seeing here in the questions coming in, some people's browsers are freezing up. Just refresh it. That will not cause your browser to shut down. One other question that I saw coming in was just about available funding related to PPP2. I did mention that, but let me mention it again because I think it's a very important point. There is plenty of funding. And also the SBA, due to these processing times, is giving the banks more time to get the funds out post the E-Tran number being issued. Because what happens after the E-Tran number is issued, the banks still sometimes are required to get additional documents into their file before they can finalize the loan agreement and issue the funding. So I think that there is enough funding, and the SBA is going to provide the lenders time, to get that funding out. They're saying more than even 20 days if needed. And with this all said, we know that businesses need the money. But one thing I can say is there is a lot of money. There's a lot of money going out, and I just maybe a little bit of appreciation for how much money is going out at times, and it taking a few more days or even 2 weeks. In cases, it could be a few $100,000. It could be a $1 to $2 million payment. If possible, just allowing the process to work itself out, I think is acceptable. If there's a situation where the business literally needs the money in the next 72 hours, then I think that, make the lenders aware of that, and they can try to move some mountains to make it happen. But they cannot do that for every application because they're just inundated in trying to fix these error codes. So I think we've covered this now, Lisa. Now we're going to move into latest updates and recommendations.
Eric, before I get into the nitty gritty, I have a question for you. We are hearing from some small business owners or CPAs helping small business owners who have gone out and applied at multiple lenders because they put their application in at one lender and it got stuck, or they didn't hear anything for a couple of weeks on how to get past that error code. So now they've got applications in at 2-3 different lenders. Any recommendations on what they should be doing?
Yeah, I mean, in some ways, it could complicate things for them, and I think this is one thing. It's expectation setting. We could go back in time, to right when this rolled out for Treasury and SBA to have gone on TV and say, this is going to take a few weeks. We got these validation checks. There'll be plenty of money. Allow the system, allow the process to work. Because what has happened is some businesses then went applied at 4 or 5 banks, and then they don't even know which bank lender got their application into the SBA. And one of the, so we're not going to get into the 50 different error codes, but what they are doing is they're looking at your existing application versus a PPP1 application. So they're checking numbers and things like that. And then once it's in with one lender, then another lender cannot advance it. So then there's confusion. So you don't know who to work. You don't know which lender has advanced it. So sometimes that can really backfire, applying to 4 different lenders. So it probably makes sense to work with one lender, and if for some reason it's not working, to withdraw that application and then go to another lender. And I do think in the next couple of weeks, things are going to get better. The fog is beginning to lift. We're a month into this, and I really do think there'll be great improvements in the coming weeks.
Thanks, Eric. All right, let's start talking about the latest updates and guidance. This is my standard reminder to access the resources that we have made available to you. You'll see that they're not in your downloads this time. They're actually on the website, but I want to encourage you to go to the website because that's where you're going to get the latest, most up-to-date information. So we do have a resource on the site that lists out all of the borrower-focused guidance, so the IFRs and FAQs that have been released since early January. We've also got the summary document that I will encourage you to go to. If you're asking a question that's been covered in that summary document, we're going to just ask you to go check out that document. You'll see a link. So download these slides and use that link to get to the latest version of it. If you are not an AICPA member, you can still access that. You just need to create a free user account. I have listed out some of the topics covered. We've added some information around eligibility and EIDL advances. I've gotten lots of questions about what's the code reference for why the EIDL advance isn't taxable. So I've actually just added that in to the summary document. So you'll have that reference for you. Big news that I'm really excited to share with you. The PCPS team has partnered with the Center for Plain English Accounting, which is another section within the AICPA, to give you a thorough, comprehensive look at accounting for PPP. It's going to also include illustrative disclosures because we're starting to get those requests as well. So it's based on the TQAs that our friend Dan Knoll has covered for us on past sessions, and we're actually going to give you some examples around the debits and credits there. It will be available next week on the site, so just be on the lookout for that. I'm sure we'll talk about it in the town hall newsletter, and you'll hear us tweeting and posting on LinkedIn once that resource is available. Our FAQs are also back, so if you didn't find your answer in the 18-page summary, then you can check our 18 pages of FAQs. It's not as overwhelming as it sounds, and you can just do a keyword search and get to the topic that you're after there. What I wanted to do today is dig into some of our top questions that we're getting from the town halls. We get hundreds of questions each week, and we can't answer them all during the session, but we do look at them and try to come up with the common themes for the week. This is one that we're getting a lot, and I want to spend some time on this one and also bring in Eric for his comments on this. But we're being asked if a borrower can apply for a first draw now and then immediately or very shortly thereafter apply for a second draw. So they didn't apply in 2020, and now they want to get the first and second draw before March 31. We can't find anything in the guidance that prohibits that, but there are a couple of caveats. When the borrower applies for that second draw, they have to assert that they have used or will use all of their first draw funds on eligible expenses. And then before they actually get the money for the second draw, they have to say that they have fully utilized it on those eligible expenses. What we don't know right now is, does a borrower have to wait until the end of their first draw covered period before they get those second draw funds? So under the Economic Aid Act, covered periods are now any period that the borrower chooses with a minimum of 8 weeks and a maximum of 24. So between 8 and 24 weeks. What's not clear is, do you have to wait at least that 8 weeks before you're eligible to receive those second draw funds if you're just now getting in your first draw application? We are also hearing that a lot of lenders are not allowing a second draw application unless until the end of that first draw covered period. And they're also saying, a lot of lenders are saying, we won't allow that second draw application unless you filed for forgiveness. That is not in the official guidance from the SBA, but the lenders are staking their position on that. A lot of lenders, as Eric has talked about in the last few minutes, are really focused on clearing out those applications that have gotten caught up in error codes. So they're focused on those first draw and second draw applications that are not the immediate second draw. So they may not be prioritizing getting in a second draw for someone who just submitted a first draw application. Eric and I have been talking about that a lot. So Eric, if you want to jump in.
Yeah, I would just, there's a couple of things here. One is, you absolutely do not need to apply for forgiveness to get a second draw. So that's somewhat separate from this, even though we put that on the slide. 2/3 of the original PPP program, they have not applied for forgiveness, and they are absolutely eligible. This one here is, it's not forbidden by the act, but I don't think, you talk about the intent. Was the intent about having first draw eligible, so they literally could come out, get a first draw, and get a second draw? So I think that's something that SBA and Treasury are going to have to think through as they look at this next phase of business stimulus. I think this is something we'll see, is the March 31st date. Maybe that's one thing that you can all talk to your congressional officials, that maybe having that date pushed out a little bit could make sense, and then you'd have more flexibility for someone, for whatever reason, who didn't do draw one until this year. I mean, there was a new group, but most of the people that are doing draw one actually were eligible in 2020. But with all that said, I think we have to, Lisa's exactly right. Right now, lenders really are not taking a draw two application from somebody that they just processed a draw one or just gave them funding to. And I know every now and then someone's saying, hey, my draw one got delayed, so it's gonna impact my ability to get draw two. Let's just wait and see what happens over the coming weeks. And as I said, I'm not sure if it was the intent of the program even to do that, to have this first and second draw right out of the gate like this. But these are questions we'll continue to ask Treasury.
Yeah, absolutely. So a couple of other questions that we're continuing to get in calculating the decline in gross receipts for a second draw application are other types of CARES and relief funds included in gross receipts. So things like provider relief funds, higher ed, emergency relief, state and local grants. We have asked for guidance on that, and we'll continue to ask for that. We have not gotten an answer yet. So I know that's a big unknown that could be holding up a lot of borrowers in determining whether or not they've got that gross receipts decline. We talked on our last town hall about the SBA in creating this cap of $35,000 per employee on a loan application. So I just wanted to clear up some of the questions that we got. Is that cap a total between a first draw and a second draw? And the answer to that is no, it's per draw. And why are they imposing this cap? Is it in the guidance? No, it's not in the official guidance, but the SBA's position is that that cap, which is based on their estimation of, you've got a cap of $100,000 a year on compensation, and you're able to get 2.5 months of that in your loan application. So 100,000 divided by 52 or divided by 12 times 2.5. And then they're throwing in a cushion for benefits and payroll taxes and things like that. So that's how they came up with their number. And they're doing that because they want to make sure that most of the impacted borrowers that are eligible can have access to the funds.
And Lisa, I'll just say this, the thing here, this is, and again, and we understand it, the clients had, the process has taken longer than they thought. And then when they did the application with their firm, with their lender, they thought they were going to get $40,000 per employee. And then all of a sudden it's capped at the end, and there's been no guidance on that. But we have spoken to the officials, and this is happening. So it's not, even though there's been no guidance, this is happening, that they're capping the actual approval amount of the loan. So this is what is occurring. That absolutely, I think we all will see an IFR and FAQ related to this. But again, this is the pressure in the system. It got delayed, and then you got capped, and you think maybe the lender made a mistake. And no, this is just the policy of the program. And if you look at it though, $35,000 per employee is actually in line with the intent of the program. To be paying more than $15,000 for benefits doesn't seem to be, and we spoke to the Treasury and SBA officials, what they were looking to do. So this again was them trying to improve the program, but we could have had better communication.
All right, we get lots of questions about tax reporting issues. So here's a list of some of the questions that you guys are asking. Basis and at-risk implications now that PPP expenses are deductible. How to actually report this on your returns? Is it going through M1, M2? How does this affect basis and at-risk? So lots of questions about this. Our team is advocating with the IRS for guidance on these issues. They are swamped with a lot of different things on their plate, but we are continuing to urge them to get the guidance out on this. We will have to wait for IRS guidance. It's not something that we're able to create an official position on. But for now, you may just want to consider extending your flow-through returns, your S corps and partnerships, while we wait for this guidance. I know that's not what anyone is looking for, but it might be a better approach than having to go ahead and do something and then come back and file an amended return. We'll absolutely let you guys know as soon as any of that guidance is released by the IRS. Okay, another fun topic is the employee retention credit. So we've talked in the past about how ERC was extended. So it now goes through June of 2021. We've also talked about the fact that PPP borrowers are now able to take advantage of ERC and vice versa, but that does create some complexities. I'm not going to go into the details of ERC today. We've had a series of webcasts on that, and I've got some great resources for you that I'm going to point you to on a slide. But we do want to talk about the frustration about not knowing what to do in navigating PPP and ERC interplay. So I think you just got to start with looking at your clients, or if you're a small business, looking at your operations to see if you're eligible for ERC. There are different eligibility requirements than simply a PPP or the PPP second draw. We do believe that absolutely most employers who took a PPP loan will have wages in excess of that PPP loan amount. So they're going to have qualified wages that may be eligible for ERC. We know also that a lot of borrowers in that number that Eric reported earlier about how many have applied for forgiveness, we know that a lot of them simply took payroll because they had enough payroll costs without looking at rent, utilities, mortgage interest, and things like that. So now they could be in a position where they don't think that they can take ERC on those wages because they use them for forgiveness. Our position, and this is based on our understanding of the intent of the PPP program, the intent of expanding ERC, and the efforts that we've made in advocating for guidance on this, is that a borrower who's already applied for forgiveness should not in any way be penalized by having an opportunity to take ERC away from them if they have wages that, excess wages that are now available to them. These changes to ERC were designed specifically for impacted borrowers. And as you've heard Eric and I talk about in the past 10 months, we want to assume positive intent at SBA, Treasury, and the IRS when it comes to these business relief packages. So if you look at the timeline, you could have a position where a borrower got their loan early in the cycle of the first round. So they got their loan in April. They have a 24-week covered period. It runs through October, but they've got wages on the front end and the back end of that covered period that they can use for ERC. You've also got examples that I talked about where the borrower maybe just used excess payroll or a little bit of their non-payroll costs. This is the position that we have advocated for with the IRS, that the borrower should be able to go back and recalculate the amount of wages that were needed based on the 60-40 payroll ratio, and taking in all of the caps on compensation, and that those ERC eligible, those excess wages should now be eligible for ERC. We're still waiting for guidance on how to actually get those into the payroll tax returns and to get the credits flowing. But, we just wanted to go ahead and have a conversation about this is a common sense approach. This is what we're advocating for. And to us, it just makes sense. There are a lot of great resources. I'm going to give a specific shout out to the first one on this list, April Walker, who has been just a vital part of the PPP team this last year, and a volunteer with a firm, Postal Waite and Netterville, have recorded a really great in-depth look at ERC. And I'd encourage you to make sure that you check out that video. It's about 40 minutes, and it's going to give you a lot of the details that you're looking for. I mentioned that we have advocated for a position. We've actually gotten that message amplified by a letter to Janet Yellen this week from a couple of senators, Maggie Hassan and Richard Burr. So we are getting some traction on indicating just how critical it is for the guidance to come out soon. All right, that was a lot of talking.
That was great, Lisa. No, and just a great close there on again, trying to, get that clear direction out there for the firms and their clients related to ERC. But clearly we can assume positive intent. They are not going to penalize anybody for getting their forgiveness application in early. So that's for sure. So we can bring Mark and Ed back up. We could almost just have a little bit of a group discussion here. We can take a look at some of the questions. But Mark, just thinking about, I mean, this is I think all of us are kind of working 24/7. I feel like every day is a Monday. We're now 48 days into this new year, and it's intense. So there's a lot of layering of different issues out there, and it's hard. It's a hard time to be providing professional services or being a trusted advisor. I mean, what perspective do you have for the firms on kind of weathering through this?
Well, again, I think we had obviously a pandemic, unique, and then a significant, as you pointed out, like a massive program that gapped over an election and a new administration, which again, best intentions, people are trying, they're going to implement, but it does create some sand in the gears, and we're seeing that at the same time. We've got deadlines, we've got anxious clients, but I do think that not only the intent of in the agencies at SBA and Treasury, but before they left town for the holidays, they passed this overwhelmingly. And those politicians went home to Main Street and told their small businesses their help was coming. And so this is going to snowball. And I think that, hopefully all that pressure will lead to some answers and also to expedite some of these. And then we got a whole nother package that's rolling out. I listed some of it, but there's going to be clients that are going to be impacted all over the place.
Yeah. So Ed, Lisa and I are going to cover some resources, but just from your perspective, kind of parting words with the tax pressures and the issues that the firms are facing.
Yeah, well, we talked a bit about the need for guidance. Lisa did a great job of that. And as Mark said, with the overlap of the new administration, even in a mid administration, it's not easy to get guidance out. So when there's an overlap, they're waiting to get the leadership into Treasury and that approval process, it slows things down. But I do want to reinforce what Lisa said about the ERC, and she did a great job of talking about the overlap. If your clients, for expediency purposes, put all of the salary into the application for forgiveness, but in substance, those clients have enough salary to cover both the requirements for PPP forgiveness and the ERC, our position is you should not lose that. And we're hoping that that will be the position from Treasury. That's what we're pushing for and setting up meetings to discuss with them.
Well, that's great. That's good. So thanks, Ed and Mark. Look forward to having you on, I'm sure, in March. So let's, Lisa and I, just kind of run through these final resource slides, which have some important information. So once you got the recent town halls, you can see what they are. We don't need to get into this self-assessment here, but that's just we've got a lot of good guidance around that. Lisa, the EIDL advances.
Yeah, I just wanted to make sure that you guys have available in the slides. And as a reminder, you need to download the slides to actually be able to access the links. But in your slides, we get a lot of questions about EIDL advances, and you'll see some resources around shared venue operators grants. So you can access the guidance that's available through the links that are in your slides. Also, always a reminder to check out the resources that we have available on the AICPA.org/SBA page. We talked about the state tax treatment chart last week. I got a note in the chat that one of the states had just passed legislation within the last couple of hours to conform to PPP treatment. So we'll be updating the state tax treatment chart yet again, but that's good. It makes life simpler for our clients and for you guys. Eric, do you want to talk about this?
I'll just say in this, we do have bi-weekly updates on our portal where we get into much more detail on some of those error codes. So you're welcome to attend that, and those are recorded. And we're always on LinkedIn and Twitter. So leverage that. We will be back with you on March 4th What I would like to say is, hope everyone's safe out there. We've got a lot of wild weather on top of everything else that's going on. Once again, feel free to reach out to Lisa and I. said that last time. If there's something that you really need to have addressed, I'm Eric, ERIK at CPA.com, and I think many of you know Lisa's email address. Our teams have been working hard. We have never really worked harder than we are working right now. And we know you're all working hard, and we want to do our best to support you during these unprecedented times with a lot of uncertainty. So thanks for being with us for this hour. Do hope you're all safe. Thanks, Lisa, and we look forward to seeing you in a couple of weeks.
Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.